Gold prices back above 1900, a trend we've seen in gold going back to the end of January, where since January 28th, gold prices are up about 7%, and that's despite a stronger dollar and despite higher treasury yields. Right now, really the only of the three major obstacles that we've talked about over the last year, that being the dollar yields and Bitcoin. Bitcoin is the only one that right now is moving lower, which would be helping gold prices go higher. But above all that, we're looking at a Federal Reserve that's looking to raise rates starting in about 3 weeks. And at this point, that would be very negative to gold prices, but we haven't quite seen that. So some of this may be a hedge against the possibility of the Fed maybe not being as aggressive as the market is pricing right now. The market is pricing in 25 basis point hike at the March FOMC, possibly another, around a 38 to 40% chance that they go 50. So at this point right now, gold prices moving higher may be a hedge against that Federal Reserve risk that they aren't as aggressive as the market anticipates. Likewise, we have rising geopolitical risks along with rising economic risks that are hurting risk assets like the equity markets. So gold finding some more favor here, and again, back above 1900, trending higher since the end of January. Now, what does this all mean for volatility? Well, if you check out that CVOL index over at cmegroup.com, you will notice that volatility has made a big move higher as gold prices have risen. Now, right now, given the fact that gold prices are moving higher against the grain, meaning as the dollar remains strong and as treasury yields go higher, gold prices moving higher along with it, that could be one of the reasons. Likewise, rising risks that I mentioned, geopolitically and economically, and even central bank risks are all on the rise, also aiding in a higher volatility. So as we've seen gold prices move higher north of 1900, we see volatility continue to extend higher as well. Lastly, let's look at the positioning. What are the speculators doing? Last week, we saw them adding back to their long positions. Now, after January, we saw them exiting their longs. We've seen over the last several weeks, we've seen them adding back in. Clearly a sign of the higher gold prices that we've witnessed. If we were to see it turn and head south, gold prices that is, it would likely mean that speculators were getting out. We have not seen that. It'll be interesting to see what happens in the aftermath of next week, which next week we have some significant events. We have Mr. Powell speaking to this, giving his semi-annual testimony to Congress. Likewise, we also have the February jobs report. So there are some things happening next week that could shift gold prices, but we aren't seeing that quite yet. Still seeing those speculators add to long. So midweek, gold prices back above 1900 despite a stronger dollar and despite higher treasury yields as we continue to see rising geopolitical risks, economic risks, and yes, even central bank risks.